If it seems like groceries and gasoline have gotten at least a little bit cheaper lately, it's true. They have. Inflation was lower in May. It's the 11th straight month that prices are down, and that could mean that no more interest rate hikes, at least from now, from the Federal Reserve. Nancy Cordes is at the White House for us covering all this. Nancy, good morning.
Good morning, Tony. Yes, that's what we're going to be watching today. The Federal Reserve is meeting again today to decide whether to raise interest rates again. But most analysts now believe that they're going to hit the pause button, thanks in part to those latest inflation numbers from May, which show that prices are up just 4% from a year ago. And I say just because inflation has now been cut by more than half since the peak of 9.1% last June as we were coming out of the pandemic. Now, 4% means that the prices for most things are still going up, just not as quickly, and the cost of some key items is actually coming down. Gasoline, for instance, is now about $1.40 less per gallon than it was at the peak, and the price of eggs dropped nearly 14% from April to May. You may have noticed that in the grocery store. That's a signal to the Fed that 10 straight interest rate hikes in a row have worked to cool the economy somewhat and bring down inflation, and that the Fed may not need to do an 11th rate hike right now. Good news, of course, for anyone looking to buy a car or a house. Now, we're not completely out of the woods when it comes to inflation. The Fed would like to see it at 2%, not 4%. But the White House is still calling this a win, especially because lower inflation is often paired with higher unemployment, which is something we aren't really seeing right now. Adriana?
Nancy, thanks so much.